Welcome to the Capital News. I am your host, Alex Karitis. Today is Saturday, July 20th, 2019. Thank you so much for joining me. A few stories we're going to touch on today is a follow-up to yesterday's topics, and then the question and the title of today's podcast, A Gold Bull Run. Are we in the midst of one? We've been talking here about the precious metals markets for quite a while. It's part of our daily routine on some of the financial assets that we talk about. We've just hit 6-year highs on the price of gold. Now, of course, it retraced. We're going to have that discussion here in a little bit. But it is something to ponder because there are a lot of big-name investors coming out who are talking about gold. They weren't talking about it 6 years ago. Well, a couple of them were. But now they're all starting to come out of the woodwork slowly but surely. Why now? Are they right? Will they be proven to be correct? Is now the time to get in? We'll discuss that. A few political stories that we're going to touch on today. Iran, that continues to escalate. We now have it both ways. We shoot down one of their drones. They shot down one of ours. Of course, now the Iranians are saying, no, President Trump's lying. The United States didn't shoot down an Iranian drone. Never happened. Never happened. Who to believe? Who to believe? We say here, in war, the first casualty is always the truth. That's always the case. Who do you believe? Seriously. I want to believe the United States of America. I really do. But we were being told a long time ago, well, not a long time ago, a couple months ago, that it was the Iranians who were blowing up oil tankers. Where'd all that go? Where was all the proof from that? Last month we had pictures. Remember the black and white Three Stooges picture quality we had there? Whatever happened to that? Proof that it was the Iranians. Nothing. This is par for the course. This is the propaganda that we are fed on a daily basis. Just yesterday, we were talking about, we're going to pray for some peace and prosperity here, that the Iranians are going to come back to the negotiating table because that's what Secretary of State Mike Pompeo said the other day, that this maximum pressure that we're putting on them in the form of economic sanctions is working, that the Iranians now want to come to the table, that our show of force in the Persian Gulf with our Navy, with our fighter jets, and who knows what else, is intimidating the Iranians, and now they're willing to come to the negotiating table. Well, that doesn't seem to be the case, does it? We're going to remain hopeful because we don't want war here at the Capital News. It's not good for anybody. We don't want it. We don't need it. Interesting, we have something sort of lurking beneath the surface over in Asia. And this is a dispute that's been a dispute for quite a while between South Korea and Japan. Has to deal with things way back in their history, World War II and prior, that is just seemingly resurfacing. And it could actually turn into something bigger. I'm not talking about any type of military attack on each other, but perhaps a trade war. And that's not going to be good for global growth. Both of these nations are major exporters. We talk here on a daily basis, and obviously when the data comes available to us, we mention what's going on with these markets, particularly that of exports. Both of them are trending down. These are major trading partners with China. These are proxies for China because we know we're getting total BS numbers out of China. We get BS numbers everywhere, but we know it's total BS from China, so you have to look for proxies, where, yes, it's still BS, but it's a little better. And so you look to Japan, you look to South Korea, and they're slowing down markedly, not just a tiny bit. So if you have this escalate between the South Koreans and the Japanese, this could cause another problem in and of itself. It'll just pile on to the U.S.-China trade war and everything else that's going on. Just wanted to run that by you because I haven't seen too much of that in the news. but it's there, it's trembling, it's lurking beneath the surface. Hopefully they can resolve this. Some people are calling on the United States because Donald Trump is evidently, great friends with the Prime Minister of Japan and the President of South Korea. I mean, everybody's supposed to be working together here, trying to contain North Korea too. So, there are things that everybody should be able to get on board with, get on the same page, put this thing aside, but it's politics. It's politics everywhere. China or Japan has to look strong. South Korea has to look strong. The politicians have to play their part. This is how things catch fire. This is how wildfires start. It just starts with a spark, and then it's out of control. So hopefully this doesn't get out of control, because this will put a damper on the global economy. We don't need it. There needs to be a correction. We talk about this all the time, but it's all of these other little things like this that just pop up. It's not good. You got to pay attention. These are the type of black swan events that, you just cannot predict. That's why it's a black swan event. If this sparks a trade war and it's something that's serious and they both dig their heels in, this could be the catalyst. Most definitely could be. So we have to pay attention to this as well. Earlier today, Yahoo Finance had an interview with the CEO of Huawei. Yes, the same company, the Chinese technology company that was listed as a national security threat by the United States. President Xi of China says, Mr. Trump, we don't like this. You have to start selling to Huawei again. Oh, okay, we'll do that, yeah. That's what happened. Now we have a trade truce. The president's happy with Mexico, sending troops down to the southern border, living up to their end of the bargain, but calling out the Chinese, saying, oh, you said you were going to buy more agricultural products. What are you doing? China said, well, we never promised that. It's exactly what I was warning against, cautioning against for months here on this podcast. Because for months we had the Trump White House coming out on a near daily basis saying everything was going to be great with this deal. And there is no deal. There was escalation. I said, watch. You better be careful. Because the Chinese now are going to have the opportunity to call into question the president's credibility. And all they have to do is start talking and say the opposite of whatever President Trump says. Just deny it. That's all you got to do. No, that's not true. That's not what we said. We didn't agree to it. And that's what they're doing. It's exactly what they're doing. And now all of a sudden, Donald Trump and company are, well, we're not in any hurry. We're not in any hurry. Because they have to be careful now, very careful about what they say. Because if China comes out and says no, who's the world going to believe? And if the world believes a bunch of communists out of China over the leader of the free world, we have a big problem. Hope that doesn't happen, but it's already taking shape. So Yahoo Finance was talking with the CEO of Huawei, and he was asked a couple good questions, I thought. One pertaining to if he wanted to actually be a part of the trade negotiations, and he really wasn't concerned with that. But he said, my advice to China and the trade negotiators is not to give in. Do not give in on Huawei. Allow the Americans to play hardball. Don't give in. Why? Because he claims that Huawei has done nothing wrong. We've done nothing wrong, so don't come back to the table on this and cave in and look weak. Don't do it. So now this gets a little bit more interesting because you never had a whole bunch of these conversations and interviews with Huawei or any other Chinese tech firm or any other Chinese firm for that matter, really making it onto the U.S. media. But now we have this interview on Yahoo Finance and the CEO of Huawei saying, don't give in. So how much longer is this trade war going to last? How much longer is the trade truce going to last? Serious question. Because if China doesn't live up to their bargain, at least from what we were told is the bargain, that they're going to start buying more American products, particularly agricultural products, they don't do it, Donnie Boy's got to slap some tariffs on. And the stock market is not going to like that. And Donald Trump is not going to like that. So what's he going to do? Is he going to play tough? Or is he just going to stay, we'll just keep it at truce because he doesn't want to take a hit to his precious stock market? See, this was the problem I also have been talking about here for months, with the president foolishly taking ownership of this stock market, because now it handicaps him on a whole bunch of other issues. This one in particular, which is another big issue on his agenda. Of course, I'm talking about trade with China, an agreement with China. This handicaps him. If he said, I'm here to drain the swamp, I'm here to renegotiate trade deals, the economy's going to do what it does, the stock market's going to do what it does, we're here for the long haul. This is not just a 4-year election. This is turning a sinking ship around. This is filling the holes. This is getting it back on the sea at full speed. It's not going to happen overnight. But we're Americans and we can do it. But nope, he couldn't do it. I don't know if it's his ego, vanity, stupid, his advisors, a combination thereof. I don't know. But he's taken ownership of the stock market. I mean, you out of your mind? And then he pats himself on the back when the market makes new highs, because we have nothing but liquidity going on. This is thanks to the Federal Reserve, who he's demonizing, but for the wrong reason, because he wants them to cut rates again. That's more of the disease, not the solution. Just because the stock market's going up doesn't make it a good thing. Why is it going up? Is it going up because there's a whole bunch of innovation, a whole bunch of productivity gains, a whole bunch of money still being made, or is it because of a whole bunch of cheap money floating through the system? It's definitely a combination thereof, but I mean, you look at the graphs, you look at the charts, you look at the manipulation, you look at the amount of debt. This is all coming home to roost. I have a big problem with this. You know that if you've been following this podcast. So a lot to get to still. But that's Huawei. That's the U.S.-China trade war. That's South Korea and Japan lurking beneath the surface. Something could break there. Something to pay attention to. Also, I forgot to mention this the other day, but of course I'm sure many of you caught this on the news anyway, but Bob Mueller, the special prosecutor, was supposed to testify on July 17th. Of course, we're well past that. Now he is scheduled to testify, I believe, on July 24th. So don't worry, folks. The circus is still coming to town. The elephants just needed a break. The monkeys needed to smoke a cigarette. They were contemplating going on strike. But don't worry, they're going to be back in town July 24th, front and center. It'll be the talk of the town next week. Because all of this week, we were talking about the 4 lunatic women in Congress and the president going at it. It's all we could talk about this week. I was hoping there was going to be another story. I mean, you can't even talk about Iran. The threat and possibility of war cannot even trump the 4 lunatics in Congress and the President of the United States going back and forth on Twitter, on camera, da-da-da-da-da. The threat and possibility of war can't even trump that. This is unbelievable. But we have Bob Mueller coming to town, the circus coming to town. You have the Democrats asking a whole bunch of gotcha questions, or attempting to complete you-know-what show is what this is going to be. Unbelievable that we are spending our tax dollars on this again. 2 years and we come up with nothing, but we're going to continue to investigate. We're going to continue to ask this guy questions. Even though he said, I'm not going to answer questions, the report speaks for itself. We were never going to go after the president. We were never going to indict him because of the precedent that exists within the Department of Justice that says you cannot indict a sitting president. Period. End of story. The ball is in Congress's court, I guess. All right, here you go. Now we're going to see it once again, and it's going to continue for quite a while. But the Democrats are going to ask questions. Okay, well, maybe was there collusion? Maybe not collusion. Maybe not conspiracy. But what about obstruction of justice? Didn't he obstruct? I mean, according to your own report here, Special Prosecutor Bob Mueller, didn't he do this? If it wasn't the president, would you indict this individual? Change the name. Joe Blow on the street. If he had done this, would you indict him? Those are going to be some of the questions coming from the Democrats. From the Republicans, some of them will stay focused on the actual meat and potatoes of the investigation. At least that's what we were told is the meat and potatoes, is the actual interference from Russia in the election. Maybe the genesis of it. Maybe you're going to have some people say, well, where was the genesis of it? You're going to get some people starting to bring up the Christopher Steele dossier, the DNC, Hillary Clinton. So it's going, if you're a Democrat, you're going to love this because they're going to go after the president. And if you're the Republicans, you may very well love this too, from a couple of the Republicans who might go to the genesis of all of this. Tell us about the Steele dossier. Tell us about the DNC. Tell us about the Hillary Clinton campaign. I mean, there's going to be a lot of red meat here for both sides. So buckle up. Next week's going to be interesting. So to the markets. The S&P lost 18.5 points, down 0.6%. The Dow lost 69 points. The NASDAQ lost 61, a decline of 0.75%. The Russell 2000 lost 8 points, down 0.5%. The Dow Jones Transports gained back another 0.6%. Remember, it lost 3.5% just the other day, but gaining some of that back over the last 2 trading days of the week. New York Stock Exchange gave back 60 points, a decline of 0.4%. Oil, despite the saber rattling in Iran and increased tensions, it's still relatively stable from yesterday. WTI is trading at $55.60 a barrel. Brent crude is trading at $62.80. Price of gold did pull back from yesterday's 6-year high, now trading at $1,427 an ounce. Silver also pulled back slightly, trading at $16.22 an ounce. Uncle Sam's U.S. 10-year Treasury inched up a little bit, now yielding 2.048%. The volatility index, the VIX, gained nearly 7% and is now trading at $14.45. So when we're talking about gold, we have some big names coming out. We got Ray Dalio. We talk about Ray Dalio here on a handful of podcasts. The founder and manager of the world's largest hedge fund, Bridgewater Associates. We have Paul Tudor Jones, another well-known hedge fund manager. We have Jeffrey Gundlach, who we mention here on occasion. This is, again, one of the gentlemen I listen to, not just to hear him out, what he has to say. I actually listen to this guy, if you get my drift. I mean, he seems to know what he's talking about. Level-headed, very successful, as is Ray Dalio and Paul Tudor Jones. And I also listen to Peter Schiff. Peter Schiff's claim to fame was predicting the subprime crisis. He also has a podcast on YouTube. Check him out. But you have these guys coming out, obviously all at different times, but within a relatively short period of time, have all come out and said we might really, very well be in the midst of another gold bull run. At the very least, start stacking it if you can. Gold, get involved with silver too. Why would they say this? What's going on? Because gold is always seen as a safe haven asset, a hedge against inflation. So what are they seeing? What are they predicting? Well, we talk about Ray Dalio because the way that Ray Dalio's firm operates, it's not a whole bunch of computer-driven algorithms. It's not a whole bunch of physicists and mathematicians and computer scientists that he has working for him. I'm sure he has a handful of them, but it's really more of a cerebral look at the markets from the perspective of history. Economic history, financial history, social history. How do people behave? Because people are markets. And that's their approach. And obviously it works for them because they are the world's largest hedge fund. So they're doing something right. King of diversification. Has all the financial assets. As should everybody if you can. Coming out and saying, look, the income inequality that exists is reminiscent of where we were in the 1940s, which of course was just very shortly after the Great Depression and really still in the midst of it. You have mountains of debt, corporate balance sheets, household balance sheets, government balance sheets. There's nowhere to run this time. The political appetite to bail out Wall Street again after 1 decade ago doing it, it's not going to be there this time. It's not going to happen. No way, no how. They might try it. They might get away with it somewhere else, but it ain't going to happen here in the old US of A. I can guarantee you that. It's just not going to happen at all. If it happens under Donald Trump's watch in his first term, or maybe in a second term, or if a Democrat gets in next time, there is not going to be an appetite to bail out Wall Street or corporate America. No way, no how. Trump's base ain't going to tolerate it, and there's no way in hell the lunatic fringe on the left is going to tolerate it. And rightly so. They shouldn't be bailed out. They shouldn't have been bailed out before. But those are really your two things that you're got to pay attention to when people start coming out and saying, well, you got to get involved with gold. Inflation risks and these type of political risks. Safe haven bets. Ray Dalio is talking about a 40% decline in stock prices, U.S. stock prices. 40%. That's what we've been predicting. At a minimum. At a minimum. Personally, I think it's going to go down a lot more than that, but 40% at a minimum, taking us back to basically levels seen in 2016. At a minimum. Paul Tudor Jones, same thing. It's time to start getting involved with gold. What are these guys seeing? What are they paying attention to? Probably the same economic data that we talk about here on a daily basis. Buy low, sell high. Remember, I still think gold is undervalued. I still know silver is most definitely undervalued. No doubt about it. I mean, what are the other things we have to take into consideration? Because I'm sure a lot of you are paying attention to some of the financial news. You see cryptocurrencies up there, the talk of Bitcoin. It was up at $20,000, a couple years ago. It crashed down to 1,000 or whatever it was. I don't pay attention to it because I don't think it is a prudent investment. I mean, if you want to get involved in trading it, good luck, best of luck to you. But it's not money. It's not a store of value. It's not even close. And now I think it's back up to, it's been at 13,000. It's pulled back down, I think, below 10. Now it's somewhere around 10,000. I mean, that is not a store of value, folks. I mean, literally, you can wake up and you can be a millionaire one day, and then the next day you could be broke. That's not a store of value. But you know what is gold? Silver. Because they have been a store of value. They have been true money for thousands of years. They're recognized as money. They serve as money. Why do central banks have it? They're all printing their respective notes, their respective currencies. Why do they hold gold? Why would they do it? They're supposed to know everything. They're supposed to be in charge. Why would you hold gold? There's no gold standard. There's no silver standard. We're completely removed from it. So why do they hold gold reserves? Interesting question, isn't it? Maybe they know the fraud that they're perpetrating on the world. Maybe they know. And all that funny money that they print up, they go out and they buy real assets with it. What's a real asset? Oh, gold. Land, mines, real estate, stocks, bonds, commodities, plants, equipment, real stuff. Now they're getting set to print even more money. Get ready. This is why these guys are coming out and talking. Do they criticize the Federal Reserve? No, not many of them. The only one that really criticizes the Federal Reserve is Peter Schiff. I mean, he's got a vendetta against these people. Gundlach, to some extent. Paul Tudor Jones, I don't follow him enough, so I really don't know. Ray Dalio, he never really goes after him. You have to understand, folks, these people, Dalio for sure, Tudor Jones and Gundlach, these people are billionaires, okay? Especially when it comes to Dalio. He knows who's been feeding him. The Federal Reserve. He knows it. Easy money, going into financial assets. He owns a lot of financial assets. That's why it's a wealth transfer. That's why it was the largest wealth transfer in the history of man. And if successful, but I don't think they're going to be, but if successful in this next round of low interest rates that we're going to see the world over, this next round of quantitative easing that we're going to see the world over, that could blow the last one out of the water. Although I don't think that's going to happen because I think the law of diminishing marginal returns is going to kick in. Remember, I am not a perma-bear by any stretch of the imagination. I was bullish on these markets for the past several years, but now I'm saying we have reached our limits, and everything is at the margins, and I am saying, that is my analysis, that we are turning over, that the ammunition from the Federal Reserve and other central banks, these bullets are losing their lead, if they even have it anymore. They can talk a big game, they can showcase, they can put things on display, but I think when it comes down to it, you might get a knee-jerk reaction. You might get a melt-up. It's quite possible, but it will not be sustained because it can't be, because this is all debt. It's all funny money. People are oversaturated. They can't take it. Seriously, they can't take it. Yeah, I'd like more money, but how am I going to pay it back? I already have enough debt as it is. I'm already living paycheck to paycheck. I'm already using credit cards just to make it by. I can't take any more. I'm paying the minimum on a credit card that charges me 25%. I just can't keep doing this. That's what's happening. You have zombie corporations that are walking around the world over. And now if they print more money, if they give more money, you're going to have these companies, these zombie companies, lining up, piling up on top of each other, trying to get that money the quickest way possible, just so they can continue to kick the can further down the road. We have $10 trillion in corporate debt. Through bond issuance, through commercial and industrial loans, and through leveraged loans, which are loans on top of loans, which is exactly what is going to happen again. They're going to come out and say, look, interest rates are low. Give me some of that money. I need it. We're not good at running a business, but we're going to keep taking this money because we need it. We're going to pay off more debt. How? By using more debt. This is ridiculous. This is why this is a fraud. The further out we kick this can, the further out we push everybody on the risk curve, the bigger the problem is going to be. I don't know how this is going to sound coming out, but bear with me on it because it might sound a little contradictory. I honestly believe that the market wants to go down. I believe this. I believe the market wants to find fair value. And fair value is to the downside, not to the upside. However, at the same time, the market seems to want to go up too. But I don't necessarily know if it's the market that wants to go up. I think it's the market, generally speaking, that wants to go down. I think it's a bunch of crackheads and addicts on Wall Street that want it to go up, because that's how most of them make their money. It's a crazy world in which we live. Podcast earlier this week, it's a mad, mad world. It's exactly what it is. Can't make heads or tails of a lot of this stuff. But I'll tell you what's interesting. When you have big money managers coming out telling you to buy gold, something's up. Because another interesting thing, and this is in agreement with what we've been talking about here on this podcast for quite a while, is how I am anticipating at some point a decoupling of many financial assets. That is to say, the typical correlation that one expects to see, I think we're not going to see, or at least not to the same degree. So an example would be, and I'm not saying this is necessarily going to be it, but this could potentially be one of them, would be the strength of the dollar, the US dollar, and the strength of gold. They could potentially both go up at the same time. Typically, you see an inverse relationship. If you have a weaker dollar, you have higher gold prices. And the inverse is true. So I actually think we might be in an environment, if and when this thing starts to unravel, where you could see a flight to safety in both of those assets, the US dollar and gold. So you could potentially see both of them go up. So that's the type of decoupling that I think is possible. Will it happen? Well, we'll have to see. But we're going to find out sooner or later. So that's it, folks. There's going to be a lot more to come on this. Like I said, I plan on doing some videos. I've been looking at some data that I want to talk about, because obviously we talk about a lot of data. What do I want to focus on first? I think I found a couple good data sets that I can do a short video on. I'm probably going to try to keep those a little bit shorter than the typical podcast, but then maybe get some more volume of those out, because it's going to be a lot to handle, so I don't want to overwhelm the audience. I know probably it gets overwhelming talking about a lot of the things I talk about here on a daily basis, just with the voiceover, not with actually anything visual. So I hope to use that as an extra guide to help educate people and inform people what's going on, and then just to give you guys a visual as to what I'm looking at, as to what I'm conducting my analysis with. And I'm going to give you the sources. I'm going to give you where to find it and all that stuff. This is not a secret. I want you to spread the word. I want you to help as many people as possible. I mean, there's a lot of other good podcasts out there and YouTube channels out there. You have Real Vision on YouTube. Check them out. You have Hedge Eye, like the eyeball, EYE, Hedge Eye is out there. These are programs that take a macro look at the world. These are former fund managers, money managers, that really don't like the mainstream financial media. Sign me up. I mean, that's what the Capital News is all about. We are bucking the trend. We are going against the mainstream. They are not commercial, but they have a small audience, and I hope that it's growing. So check them out. Again, that's Real Vision and Hedge Eye. A lot of interesting interviews, a lot of interesting presentations and charts that they pull up and explain. I mean, check them out. This community has to start growing, that criticizes the fraud and abuse and calls it out, that attacks the Federal Reserve, that attacks an out-of-control federal government. You have to wake up, people. You cannot be distracted by the mainstream media and a whole bunch of people that get on the media. Oh, well, she looks pretty, or he's a handsome guy. Surely whatever they're saying must be right. I mean, we've been talking about 4 lunatics in Congress that want to preach socialism, and a president who has to get himself in the middle of it. For a week. We've been talking about this for a week. Meanwhile, you have a Federal Reserve that's out of control. You're taxed to death. Cost of living is going up. Nothing's being solved. But let's focus on these 4 women and the President of the United States. Got to wake up, people. You have to wake up, because it's only going to get worse. But with that positive news, have a great weekend. We'll see if I can get some of those videos out maybe one day this week. I hope to do so. Just got to figure out. Obviously, I'll be able to post those without any problem to YouTube and probably on my Facebook page and Twitter and LinkedIn page. Doing it on my website. Haven't posted any videos on my website, so I might have to take some time to tweak that. But I'll, of course, let everybody know. So enjoy your weekend and stay tuned to the Capital News. We'll catch you here next week. This is Alex Kreitis. Godspeed.